Hello, everyone. Welcome. As always, you have Akshay and Deepak here from Shining Star Funding. And today with us, we have Tony here from Finance of America Commercial to discuss alt lending. Tony, why don't you take it away?
Okay. So first of all, I'm Tony Kettering, Finance of America Commercial. We do non-owner occupied investor property loans. And just want to know who I'm chatting with here. So who else do we have on the call, Akshay?
So our call base is going to be realtors and prospective buyers, and we post these videos so people can watch current right now, and then there's a majority of people who watch at their own convenience, whether that's within the next few days, within the next week, or whatever. And we give people a chance to ask questions in the chat box and whatnot. So they'll ask those questions, and if we have any today, I'll send them over to you towards the end, or we'll just filter them via email.
That sounds great. Thanks, Akshay.
Yep.
So yeah, I'll answer any questions at the end, or I can even answer emails afterwards. So again, Finance of America Commercial, we do non-owner occupied investment loans. You can see there on the slide, fix and flip, bridge. Bridge would be a fix and flip with light rehab, no money for rehab, like self-funded rehab. We do new construction, and we do rental property loans. We can do rental properties as individual loans, but also as portfolio loans, and also that includes multifamily loans. So I guess we're leading the way now in this space after COVID. We were probably top 3 before, and now we're top in the space. And we've got incredible rates and leverage loan to values because of that. So if you own investment properties, or any of your clients own investment properties, we have great options for them. So I'm going to walk through the different product lines and be able to answer any questions. So this is kind of our loans in a nutshell. We have short-term loans, which would be fix and flip, bridge, or new construction. Those are 12 to 18-month terms. And we have long-term loans, which is the rental property loans and the portfolio loans. And included in portfolio would be multifamily. So we do have the most competitive rates, loan to values, and loan to costs in the nation. If you don't know what that means, that's okay. You could just call me later. These are business purpose loans, meaning that the person that's making the loan can't live in the property. It has to be for business purpose. And our loans go out with no income verification, no employment verification, because we're basing our loans on the cash flow. It's called DSCR, or the after repair value on the new construction and flips. We allow single families, condos, multifamilies, and mixed use. We don't do, although our name is commercial, it's a little confusing. We don't do retail centers. We don't do warehouses. We don't do things that are not residential. So if there's a pillow in it and someone can sleep in it and you're not living there, we can do it. So there's no investing experience required except for new construction, which really helps because a lot of people want to get into flipping. We can help them with no experience. Their rates will be a little higher and the loan to value is a little lower, but it's a great place to start. And the more experience you get, the better the terms get. Risk-based underwriting basically means that if your FICO is lower, your rate may be a little higher. If the loan to value is higher, the rate may be a little higher. But if you got a good FICO and a lower loan to value, the rates will be extremely good and competitive. So I'll walk through the fix and flip. Again, I just talked about the rates, but we'll fund up to 90% of the acquisition and rehab costs together, which is a great possibility. We'll do 100% of the rehab budget. So say you bought a home for $400,000 and you're going to put $100,000 into it. We can finance, 80% of the purchase and 100% of the rehab, up to 75% of the ARV, which means after repair value. See, the appraiser will look at it and say, what's it worth today? What's it going to be worth with all these changes? They take the budget and they get that. We have a no appraisal required option on the standard fix and flips. Basically, if it's under $1 million fix and flip, we can do it with it's really a hybrid appraisal. We do an appraisal, but we don't charge the borrower for that. So on the rehab, you can either pay all the interest when you close, or you just pay on the drawn balance for the rehab funds. We allow a drawn balance interest, meaning that you don't pay any interest until you draw the money for your rehab or construction. We have 12 and 18-month terms on the fix and flip. Bridge is basically like fix and flip, except that you're self-funding the rehab, and the rehab is less than 25% of the cost basis or the total amount of the loan. So if you have $1 million loan, you have to keep that below $250,000 and cosmetic. You can't move walls and things on the bridge product. But we'll go up to 80% on purchases, 75% on refis, and we'll go up to 70% on multifamily. Again, on eligible properties, we have a hybrid appraisal. Minimum FICO on these products is 620, as well as a fix and flip. We don't need an ARV appraisal on this one, which makes it a little bit faster. And again, those are our eligible property types: SFRs, multis, condos, and townhomes. So this is a popular product. A lot of investors are aggregating rental properties, and there's a method called BRRR, which is buy, rehab, rent, refinance, and repeat. So people will buy a property, they do some cosmetic rehab, they rent it out to somebody, and then after 6 months, they refinance it, they take the money out, and they do it again. And that way they build up their rental portfolio. And a lot of people like to have rental properties to diversify their investments and retirements. So it's a great method. If you haven't learned about it, you could Google it. It's a great way to build up your portfolio of rental properties. So anyway, you raise your cash by leveraging your residential investment properties. So this is basically for light rehab. If people want to do structural rehab, then we do the regular fix and flip product, and you can do fix to rent as well, just so you know. So you can do it either way. New construction, this is one where we need some experience. You need to have either done a flip or done new construction in the last 3 years, 12 to 18-month terms. Up 100% of the construction budget can be financed up to 85% of the cost. The cost includes the land, the construction costs, hard and soft costs. If you know more about that, we could talk about that. But we do right now, we're ideal for infill, tear down, spec homes, not for new subdivisions. Later this year, we're coming out with a different product for more experienced contractors that will do entire subdivisions. But right now we're doing limited. We'll do up to, if the project has more than 10 homes in it, we won't do it. We don't want to be the first in the subdivision, but we're coming out with a product for that later on this year. Again, this is a business purpose loan, no income requirements on any of our loans. And on the construction loan, you have to pay interest for at least 180 days. The fix and flip, it's basically 90 days or 3 months. On the new construction, it's 6 months or 180 days. This is the hottest product we have right now, the single rental product. Our rates start at 3.5%, which is near conforming. It's a 30-year fixed loan is what we do. That's all we have on this. No income, no tax returns, no employment verification. And we have a no-fee hybrid appraisal, no fee to the borrower on loans under $1 million, and if the LTV is less than 65%. One of the great things about this loan is we can do loans up to $2 million, and if the LTV is 65% or below, there's no DSCR requirements, and there's no valuation cost to the borrower. So this really works well for high-end rentals in luxury areas. So it's a $2 million loan, $1 million to $2 million loan. A lot of this San Francisco area, a lot of people have these really high-end rentals. They don't cash flow well. People are holding them just because they like the appreciation. They don't want to sell the property. They want to refinance. We can refinance. The rates can go as low as 3.5, which is a screaming rate. And on purchases and rate and term refis, we'll go to 80%. On cash out refis, 75%. We'll do single families, condos, townhomes, 1 to 4 unit properties. The property needs to be rentable and rent ready condition when we do it. Again, if you have anybody that owns rental properties, and most people that are sophisticated own some rental properties, and they don't know that how they can pull cash out, you can be a great resource to them. Portfolio is basically you aggregate 5 or more rental properties, and you can do a portfolio loan with a one-time close. We have a portfolio express, which is basically the same terms as the rental loan, which starts at 3.5%. The loan can go from $200,000 to $5 million. Minimum property value on this is $100,000. We'll do up to 80% on the purchases and cash out refis, 75% on, rate and term refis, and we'll do 75% on cash out refis. We have a second product for portfolio, which is standard. This one we do ARMs, 5, 7, or 10-year terms, non-recourse available. We have DSCR. The restrictions are a little tighter here. You got a DSCR or cash flow at 1.15, and we're only using 75% of the gross rents. The good thing about this particular product is if you have properties in the portfolio that the value is less than $100,000, we can use this product. That's the main reason people use it, because sometimes they have a portfolio and some of the homes are worth less than $100,000, maybe somewhere in the Midwest. We'll fund up to 75% on all of these transactions. So that's basically our product line. And I want to explain to you guys that are in the branch that you don't really need to know everything about these loans. I've given you a slight overview, but you can connect with me. I'll be your specialist. All you need to do is, know my phone number. We can set up a call with you and your client. We can set up a Zoom call. I can walk through the quote engine and give a quote on the spot. I can create a quote, send it off with the application package to you and your borrower, and then I do all the hard work. I can collect the documents and run them through the process. So I'm going to show you that there's one way you do it is you just make a phone call. The other way is you can fill out a quick quote form, and here's two of them right here. One's for the single rental, one's for the exposure limit, which basically is the short-term loans. And if you can fill this out, ask your borrower a couple questions, send it to me. I can get you a quote. I can generate a quote in 5 minutes. So I would love to generate quotes for you if you have questions about them or you want to get what the rates and terms are. Anyway, so
I remember there was some online link also for filling out the quote request.
Yeah, it's basically you can go online and you can download these forms, but ask me and I can send them to you as well. I can send you that link as well afterwards.
Okay. And then on the number of units, is there a cap? It used to be 20 earlier. Is there a cap now on the number of units you'll finance in a building?
Right now we're capped at 20 units in a multifamily, but I do believe later this year we'll go up to 100 units.
That would be nice.
Yeah.
I do get quite a lot of requests for multifamily residential.
Yeah, so here's my contact information, my phone number, my email address. If you have any questions, you can send them to me. I did kind of a light version of all of our products because I didn't want to bore you with all the details. But I do want you to know the best way to find out about our programs is just to call me, email me, text me, and I will be able to help you and your customers understand it.
No, that was great. I believe you covered quite a bit very quickly. And the bottom line is it's all non-owner occupied, like you said, non-owner occupied, but for residential purposes only, and without income documentation. Those are the two things to remember.
Yeah, a couple other highlights. We do allow foreign nationals in our rental and portfolio programs, and we have a lot of them because our programs allow that. One of the things that limits people in conventional lending is a lot of the investors would like to use an LLC. Conventional won't allow it. We will. And when you get over 10 properties, Fannie Mae and Freddie Mac don't allow that, and we do. And the rates on the Fannie and Freddie products have gone up because they've limited their investor loans. So our rates basically are competing side by side with the full income, full doc loans. And we don't need the income verification, the W-2s, the tax returns. So there's a lot of reasons people do use our product. It's a great product for real estate investors to help build their business, and a great way for you to help build your business with investors.
No, that makes a lot of sense, and I think we did cover a lot, and it is super helpful. So, any other questions?
No, I have those two questions. Again, going back to that link, can we fill up the entire quote request on the link? I thought I had that access before.
No, the quote request, it's basically a PDF that's fillable. And so what you would do is I'd send it to you, or you download it and you just fill it out fillable. email it to me, and then I can turn around a quote within, that day.
I got you. All right.
And if you want, we can get on a Zoom call and I can do it live for your customer if they prefer that. That way you're kind of making an introduction at the same time.
Sure.
So either way is fine with me.
Mm-hmm.
Okay.
All right.
No other
Thanks so much,
questions?
John. Not yet, but I'm sure we'll get some. It's a very compelling presentation, very compelling products, and like Deepak said, we do get a lot of questions and queries about these, and we will get those over to you.
Yeah, and just a little bit about me. I love to help investors because I myself invest in real estate, have rentals, done flips, done new construction. So I enjoy working with investors. I really like our product line. I really like what we have at Finance of America and our processes. And so always eager to talk to people that are working with investors or investors themselves.
Yeah, great.
Definitely. All right. Thanks, everyone.
Thank you.
Thank you, guys. Have a great afternoon.